Looking at the 52-week high-low difference, we typically look at the 52-week highs and then the lows and then the difference with an indicator, but there is a market metric in TradeStation $52 WHLND that will give you that difference between the 52-week new highs and new lows. And so the question is, has this bull run been just a lie? Has it just been a Wall Street manipulated move to make sure that prices are at all-time highs to maintain investor sentiment? And based on this, it doesn't look very this move doesn't look convincing to me. The broader indexes are not doing the same as the S&P and the Nasdaq. And you see this back in 2016, 2017. The new highs were pretty consistent. New highs and new lows were much more consistent here in this phase than they are in this. They are right here. And so you see the S&P's up at 3,000 for the first time, but you don't see the 52-week new highs looking as strong as they did. The thickness of these new highs right in here, and then the thickness right in here is just not. They're not as high, and it's not as the density of this chart is not there, and so it's not as strong. And so it looks a little weak to me and looks a little bit manipulated to me. Based on these numbers, you look at the difference between the sell-off. When the market sells off, how much lower are the 52-week new lows? You see minus 1,200, and so they say, oh wow, it's oversold. Steve Mnuchin from the Treasury Department called all the six major bankers right here, and it comes up to new highs. The indexes are drug up to new highs. But I don't know, regardless of what you say about the economy, regardless of what you say about monetary policy, which is the biggest fundamental factor right now in the stock market, is monetary policy. These 52-week new highs and lows just look weak. They don't look very convincing to me. So take it for what you will. S&P hit 3,000. It's pacified. It's relaxed. And we'll see what happens next.